Hi everyone, welcome to my channel. In this topic, we are going to take a look at the common options of the payable and procurement that are defined at the business unit level. You can define the common controls and the default values for the business unit with the payables invoicing and procurement business functions. Common options are grouped into different categories such as default distribution, automatic offset, currency conversion, expense accruals, and self-billed invoices and legal entity information. Right. So uh, let's let me move to the next slide. Yeah. So basically, we will just discuss all the common options that are grouped in the category like default distribution, automatic offset, and all these list out that I have just explained to you earlier. Now let's get into the application to learn more about these common options to manage the common options for the payable procurement. Let me move to the application. So here in the application, you need to go to the setup and maintenance and then search for the manage common procurement common options for the payables and procurement. And under scope, we need to select the business unit for which business unit you want to uh, default the or define the common options for the payables and procurement. Just select and add, apply and go to task, right? And search your business unit for which you want to define all these stuffs. So where I'm going to define for US1 BU. Yeah, this is the BU for which I would like to explain your define. Already we have defined for this unit, but let's just discuss on this, right? So these all are the options where we have the default distributions, the first block, and right. So we are going to take the default distribution related options. Payables distribution defined as common options for the payables procurement for the liability prepayment and the bills payables account. And these accounts can be overridden at the supplier site level. In which case the accounts that you will provide at the supplier will be considered as the default distributions on an invoice, right? And if you have not provide any distribution account at the supplier site level, then the system will utilize the account that has been provided in the common options for the payables and procurement as the default account on an invoice. So payables also use the distribution defined in the common options for the payable and procurement for other accounts as well, such as conversion rate variance, gain and conversion rate variance losses. So gain and losses also we need to define the conversion rate variance, gain and losses from the inventory item or an expense item uh, that were occurred like not the that were accrued on the receipt are going to be packed into these accounts, right? And so variance is the calculator between the invoice and the either purchase order or the receipt, depending on the matching of the invoices, how we are matching the invoices with the POs, right? Also provide the account for the miscellaneous charges and then the default account that will be provided at the discount taken account. This is the discount taken account where which we have that this account, right? The single distribution, then you can also provide the account of miscellaneous charges, right? Distribution for the invoice lines and the type of the miscellaneous uses this account. If you don't specify your value, miscellaneous charges are prorated across invoice line items or item lines, right? Then the next account would be providing the freight account, right? So the this is the used to account used for the freight, and you have recorded the on invoice. You can override this distribution using invoice during the invoice entry, and it if you don't specify your value, freight charges are prorated across invoice item lines. Similarly, at the miscellaneous lines, right? Miscellaneous account. And the next would be the like the prepayment tax difference. So why we are defining this account? Because if the prepayment amount, prepayment invoice amount and the invoice, the standard invoice that we are applying, if there would be the difference between the tax, so that difference would be landed over into this account, right? And so that means prepayment tax difference would be if within the prepayment and invoice standard invoice. So the same would be recalculated and landed over at this account. Then the another set of options for the going to evaluate the related automatic like uh, so retainage also we need to use for the contract or type of invoices where we are retaining some agreement against an agreement. So how much retainage we are retaining from the for that particular contract. So that would be landed over this account, right? Unclaimed funds we will just we can default over here, right? So next block would be the offset, automatic offset. So this is another set of options you are going to evaluate and are related to automatic offset. If you are enter the invoice for the for expense, right, or asset purchase for more than one primary balancing values, so you might want like to use the automatic offset to keep the payable transaction accounting entries balanced, right? If you don't use automatic offset, then payable creates a single line liability account accounting entry for the invoice transaction and the single cash type accounting entry for the payment transaction. And the create accounting process then balances the journal entry using the intercompany balancing rules, right? And when you use the offset balancing, automatic offset option, payable automatically creates a balancing accounting entry and the for your transaction. The journal ledger account that each offsetting accounting entry are primary rebalancing segment or all segment except the natural account, right? Payables automatically allocate the amount of the for the various invoice accounting entries such as conversion rate or variance gain or loss, liability, non-recoverable tax for invoices matched to the purchase order, right? Non-recoverable tax for invoices not matched to a PO, and where no tax expense account to account for the tax rate, right? And also, we for the withholding tax, if you apply the withheld amount and add invoice validation type, payable allocates the amount to payment accounting entries related to cash. If you use to a pool bank account and cash clearing, if you use the pool bank account and it if you account the payment clearing account time, so it also allocate the amount for the discounts, variance gains or loss and bills payable and without tax if you apply the withholding amount at the payment date, right? All right. So let's understand the concept of the automatic offset. Let's move to the slide. Okay. So here we have the invoice line distribution account combination and invoice header liability account combination. So now The first, we are going to take the look of the automatic offset by primary balancing segment option. If you look the example that appearing on the current slide, an invoice has two invoices, distribution account combination using two different balancing values, right? Here, 01 and 02 are the different balancing values. And an invoice has two invoicing distribution account combination using the two different balancing segment value to build a liability account for each line. Payables uses the invoice header liability combination and overrides the primary balancing segment value with the primary balancing value of the invoice, the line distribution account combination. The resulting invoice line with the account combination produces the balance journal entry by primary balancing segment value. That means if we raise an invoice by using this kind of by automatic offsetting, so what's if we are providing these two accounts with two distribution lines, so what system will do? 01 and 02, these two are the balancing segment values. So what system will do? System will automatically offset these two balancing segment, like at the header level, as we are unable to like change the liability account with these two respective balancing segment. So what system will do, if we already been enabled the automatically offset option over there at the common procurement and payables options. So then system will do what will do, like it will automatically segregate or apply two lines for the respective amount for the liability also for these two respective balancing segments, right? So the resulting invoice liability account would be at the land, like this is the 0102 and this would be 2210 is the liability account. So, right. So this is the case how the automatic offset would work, right? So second option also we automate. So we have that, but where we just opt that option, we are going to take the another offsetting option by segment expect the accept the natural account option. In this example, an invoice has two invoice lines. Distribution account combination using the two two balancing segments values and two different cost entry values. So to build a liability account lines, payable uses all the except the natural account, right? So another option that we want we can use for the on the natural account only, right? So so if we select this primary balancing segment option, then system will override the balancing segment values. And if we select this second option, then all segment except the natural account. So all segment would be override except the natural account. So these two options we can follow by using this automatic offset options. So one-time payment account liability and expense account. So if we are generating the automatically offset accounting, so in that case, what system will do? System will we need to just use the BDI for the OTP. OTP is nothing one-time payment, and we need to populate with the supplier details, and that already not been defined in the system. So therefore, that supplier we need to push all the detail and interface into the Fusion. And what system will do? System will pick up the expense and liability account from itself. If nothing is we mentioned over there, system will picked up and consider these two accounts, expenses and liability, right? Because this is an expense account, so what system will do? Expense account will be debited and liability would be credited. Okay. So to conversion rates. So conversion rate, like if we have the different option, corporate, user, period end rates, and spot and user pivot, and a lot of like different type of requirement can be there in the business. So according to that, define the conversion rate type over here. So also we can enable this require conversion rate entry or not. So we can enable this checkbox. By enabling this, the system will mandate this to the conversion rate entry, right? So realized gain and distribution and realized loss distribution. This is these two accounts. Why we are defining? Because uh, at the time of making the payment, so like invoice date and the payment date can be different. Say, for example, if we are raising an invoice in USD and making the payment in euro, in that case, and the date for these two invoices would be different. So in that case, the system will pick up the date from the date of invoice. The payment date can be different. In that case, system will calculate the realized gain or loss because the currency exchange rate would be different from day to day, right? From the invoice date to payment date. Then system will uh, just pull that invoice difference, payment difference amount over here. If either it can be like profit or gain or loss, right? So realize like we are entering like suffix is realized word over here because uh, it is been made the payment already been we are making the payment of of an invoice and it should be realized only. So there we have another term which is unrealized gain and loss. So that is at the time of revaluation that comes to the picture. So that is another different topic. So that is would be the part of R2R, right? So we will discuss on that another video. Okay. So the expense accrue when the expense should be accrue at the time of period end or at receipt. So this is also depends on the your business requirement. So self-filling invoices like if we are following this practice, so the invoice numbering should be gapless. So basically, these are not for the every country requirement, but where we need this sometime the legal requirement, the tax requirement should be the numbering of the invoices should be the gapless. So in that case, this should be there in the picture. And legal entity information also we can populate over here, the VAT registration for the legal entity and the member state. All these detail we can put over here. Bill to location, which is the headquarter, whatever the detail, we can define the location for that, right? So this is how we can the configure and define the manage common options for the payables and procurement. That's it for this video. I hope you will like this video. Please subscribe my channel and like this video. Thank you.